Good day, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, the 8th of April, 2015. In a week in the U.S., tax time. Today was solar eclipse day. I hope you enjoyed it. I went out and looked at my backyard. I didn't look in the sun. I didn't want to buy those glasses. You use them once and you'll never use them again. And I watch it on TV anyways, which I can do when I'm outside. And it was very fascinating, okay, and fun. All right, definitely fun. We only had 94% eclipse in Chicago. Downstate, 100%. Niagara Falls, 100%. So there's plenty of areas that got the whole thing. Cleveland, I was watching. They went black as can be. All right. So tomorrow, what we're going to have in the marketplace is we're going to get the National Federation of Independent Business. It's an index, not going to be a market mover. Redbook Group comes out. All right, we've been seeing 3 to 5% increases each week. That's what I'm looking for. API will come out with their weekly member stockpiles, but everything picks up after that because we get the CPI numbers on Wednesday, we get the European Central Bank coming up right after that, and then we get the PPI numbers. This is the week where the CPI becomes a big number. And the reason is you had a strong jobs report. Now, if you get this is even stronger, you just keep pushing back as to when the Fed might cut rates, all right? There's a small minority out there that thinks that there's going to be a rate hike. I hope you appreciate that. It's not big, but it's a minority, and it is out there that talks that. I, of course, had not thought it would be June, and you know that. We've talked about it numerous times. September now is the most likely time if one is needed, and I don't know that one is needed. So far, the data says no. If all the data stayed as is so far, I would say, why are you doing it? All right, the Fed doesn't have to do a cut of any type. The economy's quite strong and firing. When you look at the markets today, the indices came back up. Now, it's a pretty wild day with Hamas in Israel. My latest reports that come out said that Israel this morning made its presentation as to what it would accept, and Hamas got up, left the table, and they have gone back to Gaza. So that's your answer. They're not going to do anything, but that was a pretty much unknown. Gaza's hand that they're playing is world pressure on Israel. So they're not going to give in to anything that says Israel's going into Rafah, which Israel announced after the Hamas delegation left, and they said they have now picked the date and they'll let more known about the details. But any deal that you have calls for the destruction so far by Israel of Hamas and not allowing them in the government. We'll see. The UN is prepared to now recognize the bringing up for a vote the Palestinian Authority. And it'll go before the Security Council and all. I don't know that it'll pass or not. We'll see. It'll be interesting to see what happens. But these are the pressures that Israel is facing. I'm just showing you from that organization. There's many others that are coming in there. And how you get these two to make a peace, I don't know. But gold was down a good part of the day. Once we saw that collapse, it gained $11 by the end of the day on the futures markets. Now, IEO, we haven't talked about this. This is U.S. oil and gas exploration. It's very popular ETF. This is the daily bar. Look at how this market is advanced. So it came in here as low as about 86. It's gone up recently to 111. Could it go even higher? Well, the work is still bullish. You have higher lows and higher highs. That's friendly. When you take a look at moving averages, your 18-day average is now above your last swing line low. So on pullbacks, this market still looks to me like it'll get buying attention from the market. It hit the upper Bollinger Band the last 3 sessions, and with today, which is the 4th session, it backed away from hitting it, and it lost its bullish embedded reading. All right, well, wait, did I have that? I think I got the wrong one. That's Schlumberger. That's the Bollinger Bands. I don't know why I don't have the next one there, but I don't, and I will include it for you the next time. I don't know what happened there. You've got a higher high, lower low in Schlumberger. From my point of view, the market is now running to the buzzsaw at the upper Bollinger Band. You lost the bullish embedded reading. The odds favored it going back to the 18-day average at 54.20. Today it hit 53.97. So bingo, we got those numbers hit. DraftKings, it'll take very little to get under 45.05 and, in my opinion, throw out a full-fledged sell signal in the market. If that occurs, we wouldn't want to see prices get back over their most recent highs. And if it starts down, who knows? Could you go to the lower Bollinger Band? Why not? As I told you, I think the big betting is now over, and the market's not going to wait for the very last bet to come in. We'll see what the earnings look like, and that's another thing that comes up this week. We get bank earnings starting right at the end of the week. Doesn't it seem like we just ended an earnings season? And that's what's wrong. You get these companies that trail in right to the week or so before the next season begins sometimes. So just something you got to deal with. You don't get it all the time that way. It's quarterly earnings. You have the higher high, the lower low. Okay. And you can see how the market's coming back in the gas fund. Now, why? Well, there was no attack by Iran on Israel and or U.S. With that in mind, the market is saying maybe Iran's going to give the market a bit of time. It'll pick its target. They did pick another building that they've named as their delegation. The world is in uproar because you're really not supposed to hit a delegation's building, an embassy, so to speak. Israel's saying that's not what it was used for, but there's a parlance between countries, and you're supposed to have a safe zone for your people. Israel broke that. In any case, you got a higher high and a lower low. Looking at 71.11 right through here as a potential support. You lost the bullish embedded idea here, so I can see more of a correction coming. Obviously, with Hamas walking away from the table, they could always come back, but I don't think they liked what they heard, because at the end of the day, everything Israel's presenting says, we're going to kill all of you, and that is a very difficult situation. In XLF, lower highs, lower lows as you come in to the 18-day average of closes. If the market were to get back under 41.20, you could open the door to get down here. But so far what we've had is no more than a correction back to what we call that line in the sand, the 18-day average of closes. And it's from there that the markets often decide which direction they're going to go. In XLI, we have here a pattern of a higher high and a lower low. I don't see a trend in that whatsoever. In FCX, this is Freeport, McMoran. As we look at this, still very much in an uptrend. I'm hearing even more reports as to how big the copper deficit's going to get as AI will get the cloud computing companies going. They need more copper for infrastructure, automobiles, everything electronic, and away you go. Another big report came out on that today. So deficit for a long time. This company's in a very good position as I see it for a long time to come. In RSPD, which is the S&P equal weight consumer discretionary ETF, well, you've gotten down pretty close to your support and you're oversold. I don't know that I'd want to press it one way or the other. Obviously, the CPI report's going to play a lot with this. We'll see then, does the consumer still have the funds that we think they have? In XHB, the home builders ETF, you're fighting your battle. Just like I showed you in the other market, you have the lower highs, lower lows, but right into that line in the sand where the market has been able to hold over and over. Will it be able to do it again? I have no reason to not think so, but I will tell you, you close under 107.21 and this all begins to look heavy and you open the door up for the possibility of 104.23 if you don't get back over in quick order, the 110.39 level. In the energy sector, I'm going to repeat, the fact that Iran didn't attack anyone, you built in a lot of premium over the weekend, traders assuming, this is going to be where it happens, and nothing happened. On the other hand, as I see it, economy's going, rate cuts are the name of the game coming up. We will see where they all carry the market and where they want to carry things. In GLD, you can see how you're still running the upper Bollinger Band. And we have day after day of staying over it. Day 1, 2, 3, 4, 5. No, that's not it. You closed under it. You have 2 days over it in a row. You got up right to that point and backed off. Silver markets now got, I believe, 4 days in a row over the band. You rarely go in the spider ETFs beyond 7, but 5 still the common number where the market has some problems. In the copper market, you're running at the upper band. The Freeport's good. Copper's great. look at it that way, and it's still making its move, if you will, to the upside. Then on interest rates, as long as the U.S. is doing what it's doing, holding tight in the jobs data's report, if you get CPI and PPI report, where are you going on this? The market concern, and I'll share that, is they're still concerned about a 4.5% 10-year yield. The markets already have said, okay, economy's strong enough we can handle that. 4.8 is the new number that so-called analysts are throwing around, saying that is what could break the stock indices, getting up to that number. Do I know? No. But I can tell you I listen, I read, and that seems to be the number they're talking about. You're at a support zone at the lower band and you're oversold. UUP, the dollar index, in a minor corrective mode. I look for big support between 28.19 to 28.21 in the market, but I think the professional money's taking money off the table. They want to see the CPI report. I don't think they'll worry as much about PPI, but I think CPI is getting, quote unquote, a big play in it, and you got to be a bit nervous about it. In the euro, we're going to hear from the European Central Bank this week. They have their meeting, I think it's Thursday, and we expect to hear that they're going to set us up for a June cut. If the data stays just as it is, then they're going to announce that. Some people think the bank could even go as early as April. I don't see that as a real possibility. Ms. Lagarde's already prepped everybody for June, so we will see if that's the case. The trend is up, the bias is up, the resistance is right here, from the 18-day average to the 100, but you're out of your downtrend in this market at this point in time. So, you know, you put everything together, you got to come up with game plans, and that's my job with you. And one of them is your guide to technical indicators. And the reason I make that so important is I'm talking about them here. I'm sorry I've got one of the charts wrong in ICO. I'll fix it right after this so it won't be bad tomorrow. Thought I did that. But you get all this. And I go back, believe it or not, and I look at what this was about. I helped put a lot of these together many, many years ago. We dug them out, went to Modern Trader, got their permission that we could offer them. And they're just great pieces over and over. So how do you work with these? Well, it's real simple. You just go to our website, iraepstein.com. Under free offers on the top left, or you move your cursor to the top here, you give it a click, and away you go. It can't be any simpler. I'm Ira. You have yourselves a great day, and I will speak with you all come tomorrow morning. You take care.